Hi everyone, today I'll show you what are the substantive audit procedures we do to verify the cash and cash equivalent balance. This is the part 3 of this video series, so I invite you to have a look on the previous two videos on cash and cash equivalents to have a better understanding. So let's jump into the working paper. This is my working paper on cash and cash equivalents. I have created this scenario where this ABC company has three bank accounts, a petty cash vault and two short-term deposits. We'll see what are the audit procedures we can do. I have just mentioned the materiality levels for this company, but I'm not going to take the materiality level serious because, as you know, the inherent risk of cash and cash equivalents is high. I am going to do full population test for the cash and cash equivalents. I have documented the process step by step so that the reviewer of this working paper would understand what I have done. So normally in a previous video I had shown you what is the general format of a audit working paper. I have mentioned objectives, assertions and the work done, and at the end I have mentioned my conclusion. And in this working paper I have given separate tabs for each procedure I have mentioned here. So first I have done verification of bank reconciliation. For that I have taken the bank reconciliation from client and I have tested whether those are mathematically correct, and then when I reach bank statement I agree the bank statement balance with the bank statement or bank confirmation if I have received the bank confirmation. And also don't forget the other part, you have to uh, agree the adjusted cash book balance with the GL. And when there are reconciling items in the bank reconciliation such as unpresented checks or unrealized checks, go and test the subsequent realization of them. And those, if there are some other clients have inserted some other reconciling items as well in the bank reconciliation, so go and test the source documents for them. I'll just show you my working paper. This is my working paper for the first procedure. I have started with the balance as per GL and reached the bank statement balance, and I have agreed the bank statement balance with the bank statement and confirmations. So I have reconciling items and I have taken the breakup of them and tested the subsequent realization to the bank with the subsequent bank statements. This procedure verify the existence and accuracy of cash. Alright, next I'm going to do calling confirmations. So there is a whole standard on external confirmation. If you would like, you can have a read on ISA 505. Go have a look. It's if you are interested. So for bank confirmation, it's not such a long procedures. You request the bank confirmation from each branch and then agree details with the GL and or bank reconciliation, and also keep an eye for any item which are not recorded but revealed in the bank confirmation. That is why we are mainly doing this procedure, to ensure the completeness of cash and cash equivalents. So in this column I have taken bank balance as per bank reconciliation, and then I have ticked bank confirmation called, received, and then compared my balance as per bank confirmation with my balance bank balance per bank reconciliation, and I have not identified any discrepancies, so that's good. And I haven't noticed any additional items that are not recorded in the client books, which is good. So and then I have attached my bank confirmation in the working paper itself. Or else, if you are going to attach in the software as a separate document, give the reference of those documents in this column. Next, I have done cutoff testing. This also verifies the completeness and accuracy of cache. Especially is, for example, think the person who posts entries doesn't quite understand the difference of accrual basis or cash basis when it comes to accounting, and the person has received a bill in June, and if he is paying for the bill in July, that person might think this bill relates to June and I should post the cash entry to June, which is not the correct scenario. Yes, the expense should be recognized in June, but the actual cash payments is being done in July. So you have to recognize the cash payment in July even though the bill relates to previous year. So correct such errors, we need cutoff testing. How I have done this is I have selected last 5 checks of the 2020 financial year and first 5 checks in the next financial year, and I have tested whether those payments are recognized in correct accounting period. In this example, I haven't noticed any issues, so everything is good. When you do cutoff testing, especially with check numbers, just make sure the sequence order is maintained, and say if you come across like uh, any gaps between the checks issued, you should ask why there is a missing check, because there's, as I said initially, there is a high risk for cash. Anyone can misappropriate cash, and maybe a person can write a check to their own name, so we don't know. Or maybe the check was dishonored, and that's why that check number is not there. Just ask from client why the check number is missing. So the like same, just do the cutoff testing for bank transfers and cash payments if you think you have to do for particular client, considering your understanding on the control environment and all. So that's just a simple example for cutoff testing. It's always good to do cutoff testing to verify the completeness and accuracy of cache. Next, uh, for this client, I had a foreign included a foreign currency account, and I have verified here whether the client has used correct exchange rate in converting the foreign currency balance into presentation currency. I have noted a small difference which I don't care, because sometimes client may use another exchange rate. For example, if they are using an accounting system, the accounting system suggests an exchange rate, and in our audit procedures we are using a reserve bank exchange rate, so there may be slight difference. As long as it is not material, we can ignore that. And for cash in hand, it's always better to do a surprise cash count, because that's how you get reliable audit evidence. If you inform earlier, like tomorrow we are going to do a cash count, you won't notice any differences, no discrepancies. They will make everything to show like everything is going well. So if you do cash counts, do it on surprise basis. That's when you can understand the real situation of the client. This is how I would normally document if I did a cash count. So I mention the date, time, and attendee, and who attended from client side, and I have mentioned what I counted in notes, coins, and how many, and the amount. And the amount, the cash balance they had in the locker, and the total of IOUs, if you add these two together, it should agree with the petty cash impressed. And if there is any difference, that's a control deficiency, and we should raise that in management letter and also inquire about that. Next, I have done my workings on short-term deposits. I agreed the deposit amounts with deposit certificates, and also don't forget to calculate the accrued interest. Most of the times client account only for the deposit, but they forget to post a journal entry for the accrued interest which is applicable for the year. In this case, this is not material, I can just ignore, but most of the time it can be material. And then I just mention these procedures for classification and presentation. Uh, when you do reviewing meeting minutes, bank letters, or loan agreements, just be mindful about restricted cash, which I explained what is restricted cash and how do you treat in my first video on cash and cash equivalent. Just have a look. And also ensure banking facilities, loans, these overdrafts are not set off against the positive balance in financial statements to verify if the management is giving a clear presentation of financial statements. So these are the normal procedures we do on cash and cash equivalents. So as you saw, I didn't notice any discrepancy. So my conclusion is cash and cash equivalents are not materially misstated in financial statements. So I hope you have learned how you do test of details or substantive testing on cash and cash equivalents. This concludes my all three videos on cash and cash equivalents. In part 1, I discussed the theoretical background from definitions from standards and some IFRS agenda decisions. And second, I showed you test of controls on cash, and in this video, I talked about substantive testing. Thank you. I'll see you in next video.